India is all set to go on a shopping spree as the mega e-commerce festive season sale goes live. Myntra and Meesho have opened the shutters. Flipkart's Big Billion Days and Amazon's Great Indian Festival will begin tomorrow, the 7th of October.
Beauty and fashion retailer Nykaa guides a strong second quarter despite a delay in the festive season and concerns of subdued consumption trends. Expects beauty and personal care revenue to grow at about 20% on a yearly basis, leading up to its big pink days in Q3.
Discount broking unicorn Grove's revenue jumps threefold to nearly 1,300 crore rupees in FY23, posts a tenfold surge in net profit to 73 crore rupees from about 7 crore rupees in FY22. Rise in active client base of 60 lakh users pushes Grove closer to zero though.
EV charging infra startup Bolt Earth backs $20 million in funding from Union Square Ventures, Prime Venture Partners and others, plans to expand presence within South Asia and enter new markets.
AMP, an AI-native user engagement platform, raises $7.5 million in a pre-Series A round led by Matrix Partners India and Peak 15 Partners, formerly Sequoia Capital India. Serves about 50 million users with clients including Swiggy and PayU.
Our top story today, Mobikwik came out with its numbers for the second quarter of FY24, with profits after tax coming in at 5 crore rupees, marking the digital banking platform's third consecutive quarter of profitability. The startup clocked a 52% growth in its revenue versus the same period last year. Revenues came in at 208 crore rupees in the July to September quarter. My colleague Rashna Dhanrajani caught up with Mobikwik's co-founder Upasna Taku and began by asking her if the company could maintain its profitability.
I'm very happy to report that, we are able to show these early green shoots of profitability. Of course, these quarters that we are talking about, whether it is June ending quarter or September ending quarter, we are definitely PAT level profitable, but the number is still very small. So, of course, next year is when we are expecting to see a healthier, profitable growth. But the underlying point is other companies are still promising that profitability will come, and we have already started demonstrating. So, I do hope that, people appreciate that.
So, what's the number you're targeting?
Number we are targeting, so see, for the first half of this financial year, which is April to September, we have closed revenues at unaudited, of course, at 385 crores, which is a substantial, 50 to 58% growth on our performance during the same time last year. And at that time, we were also, loss making. So this time on 385 crores, we are reporting a PAT of 8 crores. So it's a small number as a percentage, but of course, this is the beginning. And as we go forward and we complete, this quarter, of course, this financial year, next financial year is when we'll really see, stronger operating leverage kicking in. So when we scale the revenue even further, the profitability will definitely be, in double digits.
Sure. If you could elaborate on the strategy front, are there any partnerships coming, new projects?
Yeah, I think we continue to partner with banks and NBFCs. And, what we are really trying to do at Mobikwik is that we are trying to offer that digital banking experience or digital banking front to millions of Indians, consumers as well as small merchants from a financial inclusion perspective. So when I say digital banking, we are not the OEM, we are not the bank. So in the back end, we partner with several banks and NBFCs and AMCs and all kinds of financial services companies. And what we do is we simplify the products and bring them to our, audience. Our target user is not, the top 100 or top 150 million Indians who are well banked and well served, by the Indian banks and NBFCs and the financial services ecosystem. Our user, our merchants are someone who earns between 30 to 50,000 rupees per month and is not salaried but is self-employed predominantly and are in tier 2, 3, 4, 5 of India.
You're also sitting at a valuation that's been very attractive for over the years. We've been hearing Mobikwik as a unicorn. Is it a conscious decision to not raise funds further? Is it the startup winter? What is affecting and influencing this decision?
See, we have been building the company for 14 years. We are not in a tearing hurry, and so therefore we don't do, drastic, growth rates, and then you see startups where 1 year they are growing 200%, next year they are firing 500 people. We don't want to do that boom and doom thing. I think we believe in systematic growth, and we believe in having long-term compounding. So if we can grow at a decent number, and we can keep growing at a decent number for 5, 10, 20 years, that is how a financial institution gets created. And that is definitely how we are thinking about our future. We are very much inclined, and our growth rates and how we manage our financial performance is very systematic. So to that extent, we do believe that we are sort of almost ready for the public markets, and at the right time, we will look at the public markets at the right avenue to raise capital for further growing the business. I think we did everything almost okay the last time, and we also got the final SEBI approval. I think it was our bad luck that we got an approval once a lot of the large and glitzy internet IPOs had already come. And some in particular were actually open and live when we got our approval. And, after that, the market changed, and 1 or 2 IPOs did quite poorly. And that actually did not serve companies that were behind them well. And so we never got the opportunity to actually, bring the offer. So I think we just want to make sure that this time we bring it at the right point, at the right time. We also don't want to be compared to other players. So we want to show a very thoughtful play out of the financial performance, where while there will be strong revenue growth that we are showing this year, we will also maintain profitability in all quarters.
So Mobikwik, they're turning a profit for the 3rd straight quarter. Meanwhile, online gaming company WinZO has announced its expansion into Brazil. Now, the strategic decision comes at a time when Indian gaming companies are grappling with a hike in the goods and services tax, a move that has been a major roadblock for emerging startups in the sector. Now, the company is investing $25 million in Brazil, and my colleague Shivani Bazaz caught up with the co-founder of WinZO, Pawan Nanda, and began by asking him their plans and the reasons for choosing Brazil as their next destination. Take a look.
Brazil, I think, is a fantastic opportunity. I'll just share some statistics for you to understand why we decided to launch in Brazil. Firstly, it's a very similar to very similar market to India. So we understand India, and that's why it makes sense for us. That kind of familiarity is there. There's a strong emerging market play. It's the 4th largest mobile gaming market. Has about 5 billion odd game downloads every year. Then we have about 90 odd million users or gamers in Brazil. So it's a very time-rich audience. Then if you talk about fintech, again, there's a strong democratization of payments that's happening in Brazil, just the way it happened here in India, in the form of UPI. And I think that there are a lot of similarities, there are a lot of parallels. It's a fantastic market in terms of the kind of games, the kind of content that people consume, again, very similar to India, strong creator economy. I think for those reasons, we feel that WinZO will be successful in Brazil, and that's why we wanted to sort of start off our international expansion from that.
Sure. Pawan, was this expansion, the international expansion, on cards when you launched, or was this accelerated by what is happening in the country, the uncertainty in the GST regime that we have seen in the last 1 year? Tell us more about how, was that a trigger, or was it already on the cards?
See, to be very honest, in fact, when we started WinZO back in 2018, as an entrepreneur, we had 2 dreams. One was to make India's largest social gaming platform. I think to a certain extent, we can proudly say that WinZO, with about 150 odd million gamers, today is India's largest social gaming platform. And the second one was to really make India proud and build a true pure tech product out of India for the world, right? Just the way probably a Facebook or a Google has, made West proud. We wanted WinZO to make the entire nation proud that, strong tech and product companies can emerge out of the country and can really garner a lot of fans, garner a lot of users, and become really popular all across the world. So that was always the dream from day zero. Of course, we first for 4-5 years we wanted to achieve a product market fit, but now the time has come for us to launch. You mentioned that the new GST regime and what's happening on those fronts, that has definitely played a role in accelerating it. we probably would have launched a bit later. But as a move to diversify, we thought it could be prudent. It makes a lot of sense to just accelerate and probably start launching in other geographies, and we put Brazil as one of them.
I would want to circle back to the regulatory scenario in India and speak a little about the, as you said, it's just been launched on 1st October, the new GST regime, even though there have been retrospective actions on some companies. We'll not go there, but there is a 6 months review period that has been spoken about by the government. How does that make you feel as a player? Is that sort of a hope in this scenario?
We are absolutely very hopeful. I think it's a very crucial time. That 6 month period is a review period is something that we really pray and hope that the decision makers, the policy makers are keeping a close eye on what's happening on ground. There will be, I'm sure it's much as reported. There are people who are, who have to, let's say, people who are losing jobs to, there is absolutely no capital coming into the sector. Some of the early stage or smaller players have actually shut shops.
Yeah.
And over the next 6 months, it's important that a good check on, what's the impact of the new GST regime is made, and we are personally very hopeful that post the 6 month review period, we might hear some positive news from the decision makers and the policy makers.
Okay, get ready to fill up your shopping carts with great discounts. The e-commerce festive sales have begun today. The likes of Flipkart, Amazon, Myntra and others are all set for a mega sale season. Shilpa Ranipeta has been speaking to them and is standing by at the big ball with what's lined up. Shilpa, are the e-commerce sales this year going to be any bigger, better than last year?
Well, you're right. It's that time of the year when we all log on to our online shopping apps hoping to get that best deal on an iPhone, a television, laptops and more. Now, the biggest e-commerce sales of the year are here with a face-off as usual between Amazon, Flipkart, Meesho, Myntra, etc. Let me first give you a lowdown on what each of them is doing. Flipkart's Big Billion Days sale starts on the 8th of October with early access starting on the 7th. And this time it expects over 1.4 million sellers to participate, and it has a whole host of offers along with a feature that also lets you lock the lowest price or deal in advance as well. Now Amazon's Great Indian Festival sales also starts on the same day with early access for Prime members as usual. Over 5,000 new product launches and deals across categories have been announced, including on smartphones like getting the iPhone 13 for just 40,000 rupees. Then there is Myntra's Big Fashion Festival from the 7th of October, where it expects to draw 8 million customers this time. Now then there is the newer kid on the block but competing fiercely, Meesho, whose mega blockbuster sale has already begun with over 14 lakh sellers selling over 12 crore products across 30 categories. And what's their focus? Majorly rural markets. But here's the most interesting part of this year's sale season. Everyone's bet on loyalty programs. So first, Flipkart launched earlier this week VIP, which is for 499 rupees a year to take on Amazon Prime with offers like same-day delivery, free same-day delivery, early access, additional deals, etc. Then taking them on, Amazon further launched a Prime Shopping Edition plan at 399 a year only with only shopping-related benefits. Meesho also launched a loyalty program called Smart Coins that lets users earn these coins on each order and then redeem them, giving them more discounts each time. So that's about the e-commerce festive face-off. But the overall expectation, according to Redseer this year, is that these festive sales till Diwali will generate sales of 90,000 crore rupees with over 140 million shoppers expected to buy at least once. Now, this is good news for all the e-commerce players, given that sales growth, according to Redseer, in the past couple of quarters has been the lowest historically. But e-commerce players say that they are starting to see green shoots already since the Rakhi, Onam and Ganesh Chaturthi sales, telling them that this festive season will top expectations. Now, we also spoke to Meesho and Flipkart, Meesho and Amazon. We spoke to the Vice President of Amazon India and the Chief Financial Officer at Meesho on what their expectations are from this festive season. Listen in.
This year, we are very excited to see that almost 81% customers say that they intend to shop online for their festive needs, for their loved ones, and so that was very encouraging for us. Interestingly, 1 out of 2 customers intend to actually increase their shopping spend online this festive season.
Be it around Onam, Ganesh Chaturthi, etc. We've already recorded close to 1 crore orders in some of those festive sales. So we expect to top that number quite significantly, and that's our expectations for this festive season. The slowdown, if you kind of think about, is also more category specific as we see it, right? There are certain categories where the effect has been more pronounced, things like smartphones, electronic appliances, etc. Whereas if you look at our core categories, which are around fashion, lifestyle, or other sort of long tail categories, there actually e-commerce growth has been pretty decent.
So bumper festive season expected there. But on that note, it's time for us to head into a short break. Coming up next, we put the spotlight on startup funding. Beauty and personal care brand Pilgrim raises $20 million. Indian startups see 12 deals this week. That and more on the other side. Stay tuned.
Welcome back. You're watching Startup Street. Now, Pilgrim, a beauty and personal care brand, has raised $20 million in Series C funding round to increase brand building, R&D and bolstering offline expansion within India. Now, my colleague Aishwarya Anand caught up with the company to find out more about their story.
India's $25 billion beauty and personal care market is constantly getting a makeover. And the stylists are new age D2C brands who are online first, making buying off the shelf passé. Born in the middle of the pandemic, Pilgrim is adding another shade to the palette. The beauty and personal care startup is offering Indian consumers a wide range of products curated with ingredients from France, Korea, Spain, Australia, the Amazon rainforest and Swiss glaciers.
The brand was launched right in the middle of pandemic in May 2020, and we've seen an excellent growth in the last 3 years. What Pilgrim offers as a brand is international natural beauty ingredients which are high on efficacy, so fairly differentiated from the regular offering what you see in the market.
A testament to Pilgrim's strategy is the $20 million investment that's flown in its Series B funding round led by Vertex Ventures Southeast Asia and India, Fireside Ventures and Narottam Saraya Family Office.
One of our key thrust areas is innovation and R&D as a brand, and hence we will double down on our investments on the R&D front with this new round of funding. Currently, while we have one R&D facility which is announced, we work very closely with close to a dozen odd R&D facilities globally. These are our suppliers and partners, and we intend to continue working with them very, very closely like in the past.
The homegrown brand offers over 90 SKUs across face care, hair care, skin care products and fragrances in over 25,000 pin codes. It plans to expand the products range to 150 SKUs in the next 15 months. Pilgrim started as a digital-first brand but is now looking to grow its offline presence. Currently, 8% of the sales come from offline channels, the rest from marketplaces and their own website.
We've recently also ventured into offline. Currently, we are in 300 beauty advisor doors. This, by the end of this calendar year, by December 2023 itself, we expect to be in more than 500 doors. And by the end of next calendar year, December 2024, we expect to be in more than 1,000 beauty advisor doors. We are also launching our exclusive brand outlets. So by the end of this calendar year itself, we'll have at least 5 to 6 brand outlets across malls and airports. 40% of the revenues come from our website. Around 50% come from marketplaces and another 10% come from offline. However, going forward, we think that offline will contribute more and more to the revenue mix.
In August, the startup clocked around Rs 26 crores in revenue and its annual recurring revenue stands at Rs 300 crore. The brand is eyeing scaling to Rs 1,000 crore ARR by 2025.
Whether it is a website, whether it is a offline, or our marketplaces, we are profitable across almost every single channel. A large majority of our sales come from women, so 70 to 80% of our sales come from women. Our Bharat share is fairly high, so the metros contribute close to 40% of our revenues, but a large chunk of our revenues, around 60%, comes from non-metros.
Despite a funding winter, D2C has remained among the top 5 sectors in terms of investment in H1 2023. The sector witnessed about 3 times more funding than in the past 6 months, with companies raising $981 million compared to $333 million in the previous half-year period, as per a report by PwC India. However, the beauty market in India is currently under-penetrated. On a per capita basis, spending on beauty and personal care stands at $14 in the country compared to $313 in the US and $38 in China. Online commerce will become a significant channel for this industry and the BPC sector is projected to touch $30 billion by 2027. This is Aishwarya Anand for CNBC-TV18.
Speaking of funding, it is Friday and it's time to track the startup funding picture. According to Venture Intelligence, Indian startups have witnessed 12 deals valued at over $120 million this week. Some of the notable deals include Bizongo, a B2B platform, which raised $50 million as part of a Series E from Crore, Advec, IFC, Chirate Ventures and others. Now, brands aggregator Mensa Brands received $40 million from Evolution X Debt Capital. EV infrastructure company Bolt.Earth got $20 million from Union Square Ventures developers and others. And that's not all. Signor's, an open source software platform, raises $5.4 million, and debt recovery enabler DP0 attracted $3.25 million. Speaking of this year, the Indian startup ecosystem has seen over 420 deals valued at over $5.3 billion.
Okay, on that note, we're going to wrap up this edition of Startup Street. From Arundhati and me, it's a goodbye, but stay with CNBC TV 18. More news and updates after this break.